And while there have been some bright spots in earnings so far this quarter, reports are showing consumers are feeling the pressure of higher rates and inflation, especially lower-end consumers. We turn now to Sarat, Sethi, who joins us for your impact. Are we belaboring it? Does it make sense? I'm all confused about what the narrative is about the consumer right now.
So I don't think this is a one-off. If you look just in the last couple of weeks between Chipotle, Starbucks, Pepsi, Nestle, all of them are not showing top-line organic growth like they did for the last couple of quarters.
And they're not showing it despite the fact that prices are higher.
So that's the reason, right? So what did you have?
Yeah, that's right. The prices are higher, right. So they're not growing the sales.
So before, for the last couple of years, you could raise prices. Everybody was raising prices, and the consumer were spending. Now they're saying, hey, I'm not going to do it. So what's going to happen next is we're going to go to that price-to-value equation, which is what we did pre-COVID. So what are companies going to do? They're going to start cost cutting now. So you're going to see input prices. Where can they actually get the most? They're going to start cutting in terms of supply chain and people. So that's where we're going to get this. And interestingly enough, this is kind of where the Fed is looking.
They're going to cut costs. They're not going to cut prices.
No, you're not going to. You'll see shrinkflation. Mm-hmm. So basically, you're seeing that already. So the same.
See it in the cafeteria here. The fruit cup I used to get that was this big is now this big. It's gotten smaller.
And the companies that can get that, again, best price to value are the ones that are going to do well. But you're seeing that across.
Are they?
So I do think it's the Cokes of the world. I think Pepsi can do it as well. I think Nestle will do a really good job of that too, because these are brands that people want. And I think that's what you really have to focus. The companies that are going to spend in R&D, spend in marketing are going to do it. And you have to be very careful though, because they also have the global reach, right? They can buy globally and cut costs. So that's a big advantage that some of these other brands are going to have. So I think you got to watch that. And look, you can see on the multiples of some of these stocks, right? McDonald's trades at over 20 times earnings. So does Starbucks. So does Nike. So you're going to get some valuation resets, especially if the growth rate is not going to be there anymore. And I think that's kind of where the market is looking.
That's why I'm a little curious about P&G. I don't know if you have a take on that in particular. Yeah. They're going to report in the next 24 hours, but the stock's actually been doing nicely. And you'd think, well, wait a minute, shouldn't they be a prime candidate for some place where we could see, disinflation pressures, margin pressures, consumers pushing back?
I do, and I think P&G also has China exposure, which I think will, if you look at the luxury items or companies and P&G, that's where they're also seeing some slowing of growth because the consumer, whether it's high end or low end, is not buying there. So I think P&G will be interesting to see. I think you're going to probably have them talk about cost cutting right away, right? Say, hey, we can do all this stuff. We had a lot of costs come through the system, but now we're going to do that. And interestingly enough, this is what the Mag 7 did last year.
That's right? Their year of efficiency. So now it's the consumer products company.
Now it's the consumer product company's year of efficiency. And the Mag 7 are now spending money in CapEx. So you kind of have a role reversal, but the market's not rewarding some of these companies as defensive because they're saying, hey, we have to see you actually grow.
No, and to Tyler's point, at least the Mag 7 had pricing power, whereas here they're trying so desperately to hang on to the price that they've taken instead of cutting that price. And
it's all going to be about operating leverage.
Yeah.
So that's where the CFO is going to come in.
Absolutely.